Welcome to the Communicating Capital podcast, where finance and communication get a fresh perspective. Hosted by a dynamic team of women in the industry, we're here to redefine the conversation with candid, no-nonsense interviews featuring top finance executives, communication experts, and industry leaders. With a focus on clarity and real-world impact, we make the complex world of finance digestible and relatable. So whether you're a seasoned professional or you're just interested in our world, welcome to Communicating Capital. Today, joining us from New York City, I'm so excited to be speaking with Scott Powell. He's the co-founder and managing partner of Skyline Corporate Communications Group, recently named by Business Insider as one of the top PR CEOs that companies scramble to hire in a crisis. Scott has over 25 years of Wall Street experience, having worked with hundreds of publicly traded companies across investor relations, investment banking, and corporate communications. Scott, thank you for joining us today.
Thank you, Jessica. Really pleased to be here today on Communicating Capital. Thanks for having me.
We're so excited because, Scott, I've actually been following your IR career and your PR career for quite some time. I've noticed that you go to the New York Stock Exchange, you're at NASDAQ, you're up and down New York, you're up and down the coast, you're over here in Los Angeles, back to New York. And then I also see that you're setting up these major interviews, CNBC, you name it. I want to know about your professional journey. How did you become a trusted advisor to these companies to be able to bring them through all these processes?
That's a great question, Jessica. And it's a bit of a long process. Investor relations isn't really something you major in college. It's not something that you really learn a whole lot about, to be perfectly honest, when you're at school. And most investor relations professionals sort of, I don't know if fall into it is the right word, but learn about it generally after they've been in the finance industry for a while. And that's my case as well. I came to New York in the late 90s after finishing up some graduate school work and was initially a trader. So really got to understand equities and how stocks move and company earnings and company performance and things like that. And then used that skill set to move over to investment banking for a few years and learned about investor relations by being on the banking side, and had gotten to know a couple investor relations agencies and really enjoyed learning about the agencies and how they operate and the fact that they consult on so many different levels of the corporate organization, especially on the communications front, from press releases, PowerPoints, investor communications. And I like the long-term relationship that agencies tend to have with public companies.
I love hearing that. And I know about the long-term relationship for you in particular, because I know that you've worked with so many different publicly traded companies, and some of them you've been working for quite a long time. What do you think are some of the core elements of a strong investor relations strategy, and how do you help your clients implement them?
Another great question, Jessica. Thanks. When people ask about investor relations and what are the core functions, I tend to distill it or simplify it down to two core functions. So one is that investor relations firms generally help companies communicate more effectively. And second, they help companies communicate to a wider audience. Those are the two, in my opinion, the core functions of an investor relations agency. So when I say communicating more effectively, we and public companies often can improve the way that they communicate so they can, for instance, help them write better press releases that are more pointed, that distill the facts, that talk about why this is an important news event, how it will impact positively, ideally, the company's operations, helping them with crafting a better PowerPoint so that it is concise, clear, to the point, conveys the company's competitive advantages and so forth. So those are some examples of helping companies communicate more effectively. And then most public companies, the American investors have never heard of. Americans have heard of the top 50 or 100 publicly traded companies that everyone talks about all the time, but there are thousands and thousands of other public companies that most Americans have never heard of. And so our clients tend to fall into that category. And our job is to help increase visibility for those companies. We do that through getting our clients into conferences where they can meet new investors, on roadshows, coming to New York City, for instance, to meet with different investors, research analysts, helping them with social media posts, getting the media interviews, all ways that we help our clients build visibility so that more and more potential investors know about these companies and our clients.
Speaking of bringing your clients to New York, I actually saw on LinkedIn this morning, and actually quite often, that you're at the New York Stock Exchange with your clients all the time. And I feel like you're bringing them through the floor, whether it's for an opening bell ceremony or they're getting interviewed on CNBC. Can you explain the significance of these events for your clients? Because I don't think some people that might be listening in don't understand how hard it is to get people on the floor at the New York Stock Exchange on CNBC, and yet you're doing it all the time. I would love to hear just what your clients think about that. Like, do they know that that's such a huge deal,
I think they do. And to be honest, I still get a thrill from walking onto the floor, no matter how many times I've been there, and I've probably been there over 100 times in my life and career. It's still a thrill because it's one of the few remaining manned or staffed trading floors in the modern world. There are very few, if any, other exchanges that are still staffed on a regular basis with traders coming in. And in addition, a lot of the major media outlets have created studios on the floor of the exchange, CNBC being the most notable because their studio is right in front of the famous podium where companies ring the opening and closing bell. But a lot of other firms operate studios down there, Cheddar TV, TheStreet.com, Schwab, and FinTech TV, and a number of others. And it is difficult, of course, to get access to the floor of the exchange because after 9/11, public access to the New York Stock Exchange shuttered and has never reopened. I think you can probably call for a private tour or something like that, but the average person can't just go onto the floor of the exchange. I've been lucky enough to have had a long career on Wall Street, over 25 years at this point, and in the past 10 years have been very involved with a number of companies listed on the New York Stock Exchange. So we've had, over the past, I'd say 2 or 3 years, we've had several clients IPO onto the New York Stock Exchange American or the main board of the New York Stock Exchange. So I've been on the floor a lot for various clients. And then in addition, I was internal head of investor relations and US CFO for a NYSE American listed company for about 10 years. And then I was on the boards of 2 NYSE listed companies, one on the American and one on the main board of the NYSE for a couple of years as well. So because of all this, and because there are people working on the floor every day, I've gotten to know a lot of the floor traders, a lot of the executives, a lot of the reporters on the floor. And that's given me really, and our firm, really unique access and the ability to reach out to these media outlets, for instance, these reporters, and see what stories they're working on and see if any of our clients would be interested or they would have interest in interviewing any of our clients based upon the company's industry or story. So that's been a great business for us. And it's really differentiated our firm from a lot of other investor relations firms out there because we're able to provide all the IR services, but then also get some major financial media coverage for our clients.
It's major. It's so major. And the fact that you said that you're still inspired every time you go to the New York Stock Exchange, I mean, it's so historical. And the fact that you get to bring your clients there, I feel like that's a dream come true for so many people in the industry. So I hope people that are tuning in can get inspired just like I am right now, because that is incredible. I hope to go soon, and maybe I will tag along with one of your clients and just be, a part of your company for the day. I would love to do that and see the work.
I'll be there Tuesday.
I love that. I absolutely love that. And Scott, I'm going to actually flip it back to the secret sauce of what you do, because the landscape of investor relations, corporate communications, public relations, it's constantly evolving and they overlap in such different areas. And I feel like you have social media now, you have real-time news cycles. I mean, this week we had the election. I know, I'm not sure when this is going to air, but just so people know, this is the election week. So the news cycle is quite insane. I would just like to know how you're helping your companies and your clients adapt the communication strategies to help them maintain, I guess, a pulse on the overall market.
It's not easy at times. We work with companies that sometimes present us with certain challenges. What I mean by that is, for instance, many of our clients, it's the CEO's first time running a public company. So he or she has never run a public company before. We have a lot of first-time public company CEOs. So that creates a communications challenge because they don't have the know-how or the experience necessarily on the communications front. They're often a very good operator, but they've often built or helped build their company from the ground up. Mm-hmm. Or if they've come in after the company was founded, they've been able to lead and grow the company. But a lot of times they're not great communicators because they just haven't been trained to be communicators. They've been trained and have learned to be businessmen and businesswomen and good businessmen and businesswomen that have built companies. So really helping the CEOs to, for instance, practice a presentation before going to a conference or before coming to New York to meet with investors. They could do some practice presentations with our team. We can write a list of questions that we think they'll be asked by investors and help them prepare and rehearse responses so that when they get asked a difficult question, they have the answer right at the tip of their tongue, if you will. So that's one communication challenge that we face, is a lot of just the training and that initial learning curve, teaching our clients best practices. For instance, this is how we would we recommend that you approach an investor meeting, or how you should approach a one-on-one meeting at a conference, or how you should present your story at a conference. And the second challenge that we face is we do work with a lot of international companies. Probably half of our clients are not domiciled in the U.S. They're in Canada, Europe, Asia, South America, different parts of the world, and oftentimes English is not their first language. So this is another communications challenge, is some of the language barriers, and then also just culturally, their business culture, their stock market, their capital markets may operate a little bit differently from the U.S. So there's a lot of educating and teaching best practices. I use that word a lot, but really helping these clients to understand U.S.-based investors, the investment banks, the media outlets, and help them and educate them so that when they present their story, they're able to communicate effectively and ideally be well received by members of the financial community here in the United States.
It's so clear why Business Insider picked you as one of the top PR crisis communications experts as well. I mean, you're so knowledgeable. That was it. That was it. End show. That was perfect. That was perfect. I do actually want to talk to you about that, because that's a huge award. I mean, Business Insider is obviously huge. I believe they only picked maybe 10 or 15 a year for that. I mean, that's giant. So because you do know about crisis communications, I'd love to know the most memorable or challenging crisis that you've had to help manage for a client. And how did you do that?
Yeah, thanks, Jessica. And I just want to say I was so proud when Business Insider, when the reporter emailed me and asked if I would mind being featured in Business Insider magazine. I said, I don't mind. I was so honored and pleased. Speaking of the media interviews, while we get a lot of media interviews for our clients, oftentimes I'm interviewed by some of the same media outlets on the floor of the New York Stock Exchange to talk generally about major issues or major crises that are happening in the public relations space. And he happened to see, I think it was my interview on TheStreet.com from a couple of years ago. I think he saw that interview on The Street and then had emailed me directly, and we had a chat, and he ended up featuring me as, I think it was one of the top 18 PR professionals that companies hire in the time of a crisis. And so I was very honored and pleased by that, and still am. But to answer your question directly, there are a couple crises that come to mind that are memorable or noteworthy, not because necessarily they had a good resolution, but because of, I think, what I learned or what the company learned or what we were able to help the company achieve. One goes back a number of years ago, and it involved a renewable energy company listed on the New York Stock Exchange, where I had consulted for many years, and they were facing a hostile takeover. And, I was probably in my 30s at that point. I'd never been involved in an activist or a hostile takeover. It was led by one of the largest investors in the public company. It was actually a private equity fund that had invested pre-IPO. They ended up acquiring a significant stake, called a extraordinary meeting of shareholders, and voted out almost the entire board and almost the entire management team.
Oh my gosh.
And the management team decided to file a lawsuit in, I think it was in federal court, to sue the private equity fund. And it was a bit of a long, drawn-out battle with press releases going back and forth, and obviously other investors concerned about what was happening. Right. So it was an interesting process where we helped the company to communicate their side of the story and why they felt that the management team and board should remain in place, and work through that entire process. It was obviously very stressful for everyone involved, but I like to think that we did a good job communicating the company's side of the story. Although it did not have a happy ending for the management team and board, they were replaced. It ended up creating an opportunity for me. Ironically, when the private equity fund ended up taking control of the company, and the head of the fund inserting himself as the new chairman and chief executive officer of the company, he asked me if I would join the company.
Oh.
Because he was very impressed with the way that I had and the agency I was working for had handled the crisis, despite it being antagonistic at times. And he also said, Scott, you have a very deep understanding and knowledge of the company. Would love for you to come on board and take over and run the investor relations department. And he said, by the way, there's nobody left to run it anyway because I've hired everyone.
He needs your help.
So it ends up creating my first in-house position. And I've gone on to serve, not only do I run Skyline Corporate Communications Group, LLC, an investor relations agency. I've also been in-house head of investor relations for 5 public companies, several NYSE and several NASDAQ companies. So that was a memorable crisis that ended up leading to my first in-house investor relations position. And then there was another crisis where I won't mention the name of the company, but it was a NASDAQ technology company that's still traded on NASDAQ, and a very, very well-known venture capital fund, part of a large technology company that everyone knows because we use their search engine all the time, had made an investment into our client company, and then they had a right to make a follow-on investment. And there were a lot of investors really, really concerned about whether they would make this investment, whether they wouldn't. And even the company's CEO and CFO didn't know till the very last minute. Unfortunately, they said, Scott, they decided not to exercise their right to make a second investment. And we're worried that investors will see this as a lack of confidence in our company and our technology. So I had to help the company write a press release and host a call explaining this very, very well-known fund's decision not to invest and how it was not based upon the company's technology or lack thereof, or development or lack thereof, but was based on other factors. And we did a successful job. Investors were concerned and upset when we announced the decision, but we were able to explain it through a couple press releases, through a conference call, and then me speaking personally with a number of analysts and the large investors to help them understand what happened. Ultimately, the share price, while it did decline a little bit on the day of the announcement, a few days later, I think it was announced on a Monday morning, and by Thursday, the stock had recovered. And so I think we had done a really good job dealing with what investors perceived as a big crisis of confidence, if you will, the fact that this very well-known fund was not making another investment, although it had the right to. And so I think we worked through that. So those are 2 examples. There are lots of others, but of real world examples where we've helped clients work through and think through how to communicate challenging or negative events.
It's huge. That's huge. And I feel like part of that is the relationships that you already have with investors and with media and people that might be covering your clients. Speaking of relationships, I remember when I was first starting in this agency that I'll say Elevate New Media was starting. Usually I like to keep Communicating Capital and Elevate separate, but when I was first starting it, I met you. I met you about 8 years ago, and you were so kind. You were so supportive. You had such a passion for PR, for IR, that you were like so excited that I was like so interested in learning more. And I'll never forget it. It meant the world to me. And I doubt that anybody remembers those types of things. So when it's done to you and you're like nervous going to new places, new investor conferences, the people that are kind, the people that are building those relationships are the ones that really stuck with me. So you stuck with me for quite some time. So thank you for that. And as part of that, I'd love to discuss relationship building and why that's so important in investor relations and public relations, right? So I'd love to hear from you of relationship building and what that means to you.
Another great question. And relationships are so important. And by the way, thank you for remembering our conversation from 8 years ago.
I'll never forget it. It was so nice. It was so nice.
I appreciate that. And, I maybe part of it goes back to my education. I for better or for worse, spent a lot of time in school earning a lot of degrees. And I was also an adjunct professor at the Gabelli School of Business
really? I didn't know
the MBA program at Fordham University and at the Lincoln Center campus in New York City for 4 years. So I do have a little bit of a teacher in me, if you will. And so I do try to teach, mentor, explain, support, people that will come to me. In fact, I've hired a number of my former students to come work for me at Skyline Corporate Communications Group.
That's so cool. I had no idea. They probably love that and are so motivated and loyal. And they're like, I'm going to show how great I love to hear that. That's fabulous.
But I'm not as nice of a boss as I was a professor.
They're like, soon to find out, right?
No, but relationships are important, and they're important on both sides. They're important with our clients, with our customers, but they're also important with investors. On the client side, we always try and work very, very hard for our clients. We always try and give them what they want, what they need. We also try to direct them in terms of what they should or shouldn't be doing in terms of various investor outreach activities. We're very engaged. We talk to almost every client almost every week with a formal planning call. So we're very proactive in that sense. And even when clients leave, we maintain a relationship with them, and a lot of them will come back eventually. They may leave for various reasons. Sometimes they hire someone in-house to perform the function. Sometimes they run into a cash shortage and they have to cut cut somewhere. They can't cut their securities lawyer and they can't stop paying the exchange. But, so oftentimes they'll cut investor relations services back. But we've had a number of clients come back to us over the years. And I think that's a testament to how we treat them while they're a client, but also how we, treat them when they're no longer a client and maintain a relationship with them, keep in touch. If there's something interesting that comes across our desk, send them some interesting piece about the industry, perhaps. Sometimes we still get inquiries from investors or analysts, and so we'll pass those along. So maintaining that relationship and working really hard for our clients is really important. And, really trying to add value and trying to help. To me, that's really important in any business. Doesn't matter if it's investor relations or if you're, selling washing machines or if you're a carpenter or food or you're an accountant or lawyer, whatever it might be, caring for your customers is really, really important. And that's very important to me and to us. And I think we demonstrate that on a regular basis. On the investor side, for better or for worse, it's sort of investor nature or human nature. We don't get calls and thank yous when investors make money, right? When the stock goes up, they tend to call when the stock goes down. They've lost money and they're upset, they're confused, they're angry. So unfortunately, a lot of our contacts with investors, particularly retail investors, can be a bit antagonistic because they're confused about why a stock declined. Or sometimes we do work with large institutional investors and they express disappointment in companies' quarterly earnings or something like that. But what we always try to do is listen to the investor first and foremost, because they generally have been injured, right? Because they've lost money. That's generally the injury that they suffer is a loss of their investment or partial loss of their investment. But we try to listen to them, understand what their concerns are, and then try to relay those concerns back to the company management team, and then explain, if something happened to cause the share price decline, okay, let's explain to the investor what it was. Did the company miss earnings? Did they lose a major customer? Did margins contract? Did a new competitor enter the space? Explain exactly what happened if we know what happened, and help the investor understand what it was that caused perhaps the share price decline. And then also importantly is explain to the investor what management is doing to try and rectify the situation or prevent this from happening again. If they lost a major customer, maybe increased diversification of customer bases is the strategy for the next year, or one of the strategies for the next year. If margins contracted a little bit, maybe they need to look at, maybe higher margin products or services that they can start to develop, or maybe enter into a different industry where they can charge a higher fee and have higher margins, but whatever it might be. And then the investor, feels that they've been listened to, that their concerns have been addressed, but also it gives the company a chance to explain what they're doing to make improvements, because the company certainly understands what happened and they know what went wrong, and they can try to implement changes or measures to reduce the likelihood of that happening again. And I think that's a win-win for everyone, because the investor feels that their concerns have been addressed, and it also gives the company a chance to explain what they're doing going forward. And that can help inspire new confidence from that investor.
I love that you're talking about the relationship part. I feel like that's I think that'll be the main topic of this interview when we're looking at sharing it with people. Just taking that soundbite, what you just said about building that investor confidence and building up the actual relationships, noting that it's real people on the other side of the phone that you're talking to. It's huge. It's huge. And so I'm actually going to, before we wrap up, I'm going to go ahead and just end on that one, because I think that's that was it. Like that, again, you keep going out with these really good sound bites. It's like you're media trained or something. But before we wrap up, Scott, do you have any final thoughts or advice for anybody that might be looking to follow in your footsteps?
As you can probably tell, I'm very passionate about the investor relations business, and I really enjoy this part of the business. For anyone looking to follow in footsteps, it's a little bit of an unusual career path, because investor relations often involves both sort of left brain and right brain, or quantitative and qualitative. It's interesting. There are very few careers that I know of that require both writing and communication skills, but also a knowledge of numbers and finance. And usually most professions are geared towards one or the other, and not a meshing of the qualitative and the quantitative. So being able to be a strong writer, but write about finance and write about earnings per share and gross margin and revenue growth and things like that. So it's a bit of an unusual career. It's interesting because it does mix the left brain, right brain, if you will, the quantitative, the finance, the numbers, and also the qualitative, being able to present publicly or have your clients present well publicly, also requires writing skills. So I love the fact that it blends both of those. And what's also great about the career is that you are constantly meeting with companies with really interesting technologies and products. So you're at the forefront. You're seeing some brand new technologies before they're sometimes before they're really well known. And so you're seeing some really amazing things with like artificial intelligence and electric vehicles and telemedicine. And so that's another fascinating and great part about the industry, is just seeing these companies and brand new technologies or products and services that are really innovative and interesting and exciting. And I think third, just the access to management. We interact constantly with C-level executives, with the CEO and the CFO, and it's great access to senior management. We also learn a lot about their vision, about how they've grown the company, and having that access is unusual. A lot of other professionals don't have that kind of access to CEOs of NASDAQ or NYSE listed companies. And it's a fast-paced environment. Things happen quickly. News spreads very, very quickly these days with the internet and things like that. And so our clients need to react quickly as well. And so things happen really, really fast. So it's an exciting, fast-paced environment. But I think it's also rewarding. I'll say that as the fourth or fifth point that I'm making. It's rewarding as well, because we can see tangible impact. Working with a client for a year or 2 years, we can see an impact. We can see that the press releases are much better written. The PowerPoint is so much clearer and better and more polished. Their verbal presentation is excellent compared to what it was a year back. There are more analysts covering the company. There's a greater shareholder base that's expanded. They're at more conferences. They're getting more media interviews. So we can see really tangible results of our efforts. So I would encourage people to really look at the investor relations industry for all the reasons that I mentioned.
I love that. Scott, you're so passionate about IR and PR. It's been a pleasure having you on the show today. Thank you for joining us.
Thank you, Jessica. It was a really great pleasure to be here with you today. Thanks for having me.
Thanks for coming. I love it. So thank you so much, everyone, for joining us today on Communicating Capital. For our listeners who want to connect with Scott, be sure to check out the links in our show notes. Thank you so much.